Hey guys, Don Durrett, Gold Stock Data. You're probably getting tired of my videos, but I'm trying to educate you on the quality miners before this bull market starts. So you know what's out there. I recently just did a top 20 silver miner and mentioned about 10 other stocks that were kind of close to being a top 20. And now I want to do, this isn't top gold miners, but it's the top producers and it's 38 stocks. So these are the 38 gold producers that I consider very high quality, and they also have good upside. To review, green is top 25 stock. A top 25 stock is not necessarily a count of 25 stocks. It's stocks that I think have a good risk reward that have potential five bagger or better. And then blue is a top pick, which it's a potential five bagger, but it isn't good enough to be on the top 25, so it's close. And four is a potential 10 bagger, three is a potential five bagger, and 3, 5 is a likely five bagger. Three is good risk reward, 2.5 is marginal, 3.5 is excellent risk reward. And then A is the best. This is like a school grading. A is the best, A minus, next, B plus, B, and then B minus. I consider anything B or better to be good, and B plus or better, very good. And then anything that's B minus would be kind of marginal. So if you see a 2.5, you might see a B minus, but if you see 2.5 and a B, then it's close to being a 3.0. You probably wouldn't see a B plus and a 3. So if we scroll down this list looking for B minuses, there's only one B. Oh, here's the second one. So we have Resolute, which is a B minus 2.5. So there's only two stocks on here that are kind of marginal, maybe shouldn't be on it. I would say a three. I'd say Galliano um, would be another one, but just about all the stocks on this list are high quality and deserve to be on it. Um, okay, so we have 38 stocks. I want to go over them. It's probably going to take us an hour, another long one. So you guys can get a little overview on what I consider the highest quality producers with good upside. So there's very few majors on this list. I have them in alphabetical order, but M's are majors. So we have one, two, three, four. So there's five. So of the 38, one, two, three, four, five, there's only five majors. So those majors, a major for me is more than $3 billion market cap. Um, Wall Street would consider a lot of my majors as mid tiers. So I got another one here that's El Dorado's right on the edge. El Dorado and B2, they probably consider those big mid tiers. But I don't have anything. Looking at the market cap, it looks like Endeavor Mining at 5 billion is the largest. So the average in here is like um, probably 1 billion. Quite a few of them. I guess I go ahead and sort it really quick here by market cap. So, Pan American is at 9, and then Endeavor 5, and then we start getting into the threes and twos. But over three, we only have five companies, and then we go into the twos, and then it starts in the ones. And so then we get down. So there's not that many. We have less than 10 stocks here, under a billion, and under 500 million, we only have five names. So they're basically all mid tiers. So we're looking at, mid-tier majors. This this list of 38 stocks would make for an outstanding ETF. Let's put it that way, because basically really good quality with outstanding upside. I mean, we have a lot of 5+ baggers on this list here. So let's go back to alphabetical. If I do alphabetical, it'll be easier for you to find them. If you're looking for Pan American, you can go forward to the P's, right? So we'll do alphabetical. I'm going to start. Okay, so we're going to start with Allied. Um, Consider that I own all of these stocks. If I don't own one, I'll let you know. Let's put it that way. Let's go that way. If I don't own it, I'll tell you I don't own it. But most of these I own because they're high quality with good upside. So Allied Gold, they mine in Africa, and so if but they don't mine in South Africa. Otherwise, I probably wouldn't own it. But what I like about Allied is a lot of gold, generates a lot of free cash flow, really high quality company, and I consider it a growth stock. Um, it's it's kind of on a peer with Perseus Mining. Perseus isn't on this list. I don't believe. Oh, it is on the list. I'm sorry, Perseus is on the list. So I would consider Allied and Perseus to be one level below Endeavor Mining in Africa. But if you don't mind Africa, I think Allied is an outstanding company. And if we look at their balance sheet, they only have 55 million in debt. That's very low for a company of its size. Most companies that have $1 billion market cap, they usually have more than 55. So they're trading at a 2 multiple right now. So very, very cheap. So yeah, so we can look at these multiples. Let me scroll over. I like to do a quick look at the multiples. I guess I could sort it. Let's do that. Let's sort the multiple. So we got a few that are under 2, which is kind of crazy cheap, right? Resolute, Orezone, and Jaguar. Resolute and Orezone are both in Africa, and then we got Jaguar is having its problems right now. Then Allied, another one in Africa at 2, and Greatland, that's insane. They're over in Australia, and they're trading at a 3. Aris Mining down in Colombia, 2. Centerra, their flagship, they're mainly in North America, plus they have one mine in Turkey, and they're trading at a 3. I love Centerra. Then Aura is South America. It's another one crazy cheap, 2. Integra, 3. It's crazy how these stocks with these very low multiples, I like them a lot. I mean, these are all quality companies. Why do these quality companies mean so cheap? West African, Africa again, B2 Gold, Africa, Mali Exposure, Galliano, Africa, West Africa, Endeavor, West Africa, Perseus, West Africa, Artemis, Blackwater, Canada. So that one hasn't been revalued higher yet. And then Vault, Bellevue, Pantoro, Fortuna, Eldorado. Um, you can see a lot of stocks valued under 6. If you on this entire list, look at how many are above 7 with their current multiple. You got SSR, Pan American, G Mining, K92, Gold Road. These last 3 are all Australian, and all these other stocks are going to catch up to Australia. But on the whole, you could see that the valuations are kind of crazy cheap because when this bull market starts, these companies are all going to have multiples in the teens, and they're currently all 2 to 7. So they're all going to double, triple, quadruple just on multiple expansion once we get a bull market. So Allied Africa. So I mean, a lot of people are going to pass on Africa, but these are companies that have good management teams, good properties, good cost. The only thing that's going to bite them, of course, is politics. So, a lot of people are going to avoid them. I'm probably going to end up getting bitten because I got a lot of exposure to Africa. But I think on the whole, I think, I want to own these companies. So, okay, Eris. Eris is in Colombia. They have 2 mines, not 2. Segovia is expanding production this year, and then Marmato is coming online next year. So they're going to jump in production from 275,000 ounces to 450,000 ounces, and it's not priced in. I really like these opportunities where you can buy a company that's going to be growing production into a bull market. That is a recipe that works. I'll give you a perfect example is I bought First Majestic at dollar 15 in 2009, and they had all this production growth that was coming online. So the new production came online in a bull market, and their stock went from $1 to $25, 25 bagger. And that's the kind of leverage you can get when you have production growth into a bull market, and that's kind of what Eris has. Artemis, Artemis, they're just right now ramping up Blackwater, and it's a 500,000 ounce producer in a good location, long life mine, and they're going to be generating a lot of cash flow. And once they clean up their balance sheet, they're going to find a way to grow that company. But insider ownership 40%, so nobody's going to steal it. They have a lot of debt, but they're going to pay it off fairly quickly because their free cash flow is off the charts. They're paying right now. Their free cash flow is a 4, so we take their balance market cap is 200, so their free cash flow is about 500 million. They're going to pay off their debt in 1 year. It's a 1 year payback. New Gold, they basically sold that project to Artemis because they couldn't afford the capex. They're having trouble. They'd love to have it back now. But I think Artemis is going to find a way to grow. Location again, it's in British Columbia. Aura Minerals, they're based in Brazil. This is a company that's kind of under the radar because it's a lot like Fresnillo and Hochschild. It's owned by a Latin American company. Like they'll do a lot of their presentations in Spanish. And so a lot of people avoid it. I don't have it on the top 25, but I do have it as a 3.5, but it's not a B plus. And it's a $1 billion company, but they have 50% insiders. A lot of these Latin companies have been around for a long time, and they have very high insiders. The reason why I don't have it at B plus is they have 340 million in debt. I'd like to see that cleaned up, but they're trading at a 3 multiple. That means they're generating a bunch of cash. Um, you know, market, well, they're generating about 200 million, a little less than that, 150 million in free cash flow. But Aura is a company I always ignored it, but it got so cheap I had to buy it. It's silly cheap trading at a 3 multiple. You can't beat that with a stick the way I look at it. Okay, B2 Gold. B2 Gold, it's gotten super cheap. They're having some, it's another one who's got that West African exposure in Mali. But the project that they're building, um, it's in Canada. It's up by Nunavut. That's a really good project, but a lot of, and it's going to generate a lot of free cash flow, and it's kind of diversifying them away from West Africa, where they B2 Gold historically is focused, and now they're kind of focusing more in North America. I think B2 is a growth story. Look at it, it's a 4. It prints as a 10 bagger. I have it as an A minus, so I like it a lot. I don't even have it as a B plus. I have it as an A minus. The reason I have it as an A minus because I like their management team. I think their management team knows what they're doing. I think they're going to find a way to grow, and it's they pay a high dividend, usually 5% plus. Um, One thing about these are all quality gold miners, quality management teams, but that doesn't mean they're guaranteed. No stocks are guarantees. I always say you're just going to buy some of these stocks and put them in a basket and then wait and see which ones do well. You're not really trying to pick winners. And saying this, you can't pick winners. You don't know. Like every stock, like these stocks that I've all marked here, um, if you bought all 5 of those, you don't know which ones are going to do the best. You just don't. That's just the nature. In other words, I don't care what data that's available today. We don't know the future. We don't know how these things how it's all going to unfold. Every company has different issues, um, different opportunities, different problems. So don't try to pick winners. Just try to get a good basket of as many companies that you like as possible. Okay, we have West African exposure, of course. Now the next one we have Australia. So you can do Australia exposure, then you can do Canada exposure, you can North America, and then we have Latin America. So we have all these different regions. You can pick which ones you want to avoid, which ones you want to be overweight. Bellevue, I'm a big fan of Bellevue because they have so many drill targets. It's almost crazy. I think this is going to be the next company to get taken out unless they do a deal and strengthen up. But it's they have some of the best land in Western Australia, and there's a lot of companies that have good properties in Western Australia. And Bellevue, I mean, it's unbelievable how many good targets they have, and they have a lot of them. And um, I I don't have them on the top 25. And now let's find out why, right? We got to find out why. And so their balance sheet is, it's not great. 62, 62, trading at a 4 multiple, so they are generating a lot of free cash flow. Um, okay, so they don't have debt, so and their costs aren't bad. So Don, why don't you have them on the top 25? I don't know. Trying to think about why I didn't. I usually have a good reason why I leave a company off or not. Um, I can't think of it. Let's go take a look. Let's go and see if I can figure out why. I mean, I have the risk as some. So I basically say this company doesn't have very much risk. Um, 3, 3, some. But the question is, why don't I have it on the top 25? Why doesn't it qualify? Okay, so they're hedging. They're hedging a significant amount of debt in gold until 2028. The irony is that they already paid back half their loan in the first year of production. This is the million acres. Remember, I told you they have drill targets all over the place. A million. These are a lot of these properties are really good. A lot of excellent geology to grow production. The team here, the management team in Bellevue is really solid. I really like them. I met these guys at Beaver Creek. I was very impressed, and they were nervous about getting taken out because they realized what they had. Um, I really, I mean, this thing should be top 25. They don't have a balance sheet problem. They don't have a cost problem. Their margins are $1,300 right now. Um, Cash cost of $1,000. So their ASIC 1550 is about $1,300 ASIC. I have that stock wrong. I have it. Um, Bellevue should be top 25. Okay, Calibri. I hope I can get through this thing in an hour. Calibri, they're producing down in Nicaragua. And Nicaragua, they had really good margins, generating a lot of cost. I have them as a B plus because of the location risk in Nicaragua, because the U.S. put um, sanctions on Nicaragua, but Canada hasn't. But that's the reason I didn't put it as an A minus. But their Nicaragua project have a really good grade, have good margins, and they bought Marathon Gold. They acquired Marathon Gold, and Marathon Gold is a really good project, Valentine Lake, and so that kind of put Calibri on the map. So now they're a $1.6 billion company, but they're still printing as a 10 bagger, and I think they have a low multiple. The insiders are 20% isn't really great per se. They're trading at a 5 multiple, which isn't high. In their balance sheet, they have no debt, and which is amazing. They might have had to add some debt for Valentine. Valentine's built right now. I'm pretty sure it's ramping up. I think Valentine's going into production this year, and I'm not showing any debt, which is kind of amazing because Valentine Lake was a big mine. You think they have about 300 million in debt there. That's something you got to double check. But Caliber, I think Caliber, um, other than the Nicaragua risk, um, it's got, really big upside. So the one thing we haven't checked is the upside, the growth. So I always use free cash flow. So this is future free cash flow upside. Um, wow. Okay, so I'm gonna do it the other direction. Okay, so this Jaguar is a 25 bagger. But the thing about Jaguar, they have to do their cleanup, and their cleanup is going to take about a year. They're not going to fix that mine until like Q4 this year. And we don't know how much money it's going to cost them, how much they might dilute us, they might raise some debt. But if they fix that problem, they have about 50 million in cash right now. I think in 20, 30 million dollars they're going to need to fix more on top of their 50 million because they got I think 50 million, 50 to 7 million, $70 million fine, which they're appealing. Um, and so I think it was 72 million on the fine, and then it's going to cost them another 20 to 30 to do the cleanup. So, but they're generating free cash flow. I'm still bullish Jaguar. That's why it's on the list. Okay, we got Orezone 20 bagger, Resolute 17, Aris 13, Integra 12, Greatland 12, Allied 11, Galliano 11, B2 10, Equinox, Centera 9, which is kind of insane because they're really good. West African 8, West Gold 8, Vault 8. These are Aussie stocks. Calibre, we just did 8. Bellevue, another Aussie 7. Pan American, you wouldn't think Pan American, it's printing as a 7. Endeavor Mining 7. Horus 7. Perseus 7. SSR 7. Eldorado 7. Pantoro 6. Dundee 6. Regis 6. New Gold 5, Artemis 5, Fortuna 5, I Am Gold 5, K2 5, Capricorn 5, Orla 5, G Mining 5, and now we have some fours and threes: Catalyst, Ramelius, Genesis, Torex, and Gold Road. Gold Road, Genesis, and Ramelius are all Aussie stocks. If they blow out on the multiples, then you could do a lot better than this. So these are my estimates, but if they get higher multiples, these estimates are based on my multiples, but the multiples could be much higher, especially in Australia, Western Australia. We could see, some really blowout numbers, blowout uh, multiples, 15, 18 for some of these mid tiers. Okay, so we were doing Colibri. So the next one is going to be Capricorn. So, you know, Capricorn, I think it was like a 5 bagger, but Capricorn is, high quality mid tier in Australia. If you want to load up, I call them the Aussie 9. So the Aussie 8, but I added Greatland. So the Aussie 8, they're all on this list, all the Aussie stocks, so all the ones with AX. Well, Catalyst is an Aussie 8, but just about all the other ones are. Um, I think that if you want to defend location, if you want to focus on location risk, North America, Australia, you can't really go wrong with the Aussie 9. And then I added Catalyst, which would be 10. Catalyst is a 500 million ounce mid tier. That would give you 10 mid tier producers in Australia. That would give you, offset some of your risk. But Capricorn, they're growing production. They generate, they have good cost, generate a lot of free cash flow. I mean, I have Capricorn as an A. That's how, that's the kind of quality mines they have. And again, this is risk reward quality. Okay, then we got Catalyst, another Aussie. Now they're smaller. They're trying to get get on the Aussie 10 list, but they're not yet. I don't have them a B plus, and then I don't have them as green. So that one is a little bit more risk. Centera, trading this company, you need to take a look at it. I mean, their balance sheet. is pristine. They have 600 million in cash. They have no debt. They're generating, I think, 400 or 500 million a year in free cash flow. So we have 1.5, and then if we go and we look at their margin, their multiples of 3. So they're generating, oh, there it is right there. They're generating 500 million in free cash flow. This is the free cash flow. Yeah, let's sort this line. This is a good one to sort, right? Okay, so this is the free cash flow that these companies are generating. So Integra, not so good, but Integra is building a big mine. So it's more of a down the road kind of thing. You're getting, they have Florida Canyon and Nevada. We're going to get, we'll talk about it. And plus um, they're, they're building a big mine in Idaho. And now I can't think of it, name, but so that's why you're buying Integra. Then Jaguar, I mean, they're right now, Jaguar is generating, because I've taken the production down, because one of their mines is still there. It looks like about 20 million a quarter. They're trading at 2, and then it just starts going higher. This is 100 million. This is the bottom of the barrel is 100 million, and then it just keeps going up. It's just going up, 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 up. But look at this. Once we most of these companies, if gold prices do not drop, they're generating $300 million in free cash flow or better. That's improving their balance sheets, allowing them to grow. That's some really good numbers. Now look at these three at the bottom. We got Endeavor generating 1.5, Pan American 1, B2 Gold trading at a 3 multiple is generating $1 billion in free cash flow at current gold prices. Artemis 700 million. That's unbelievable. And this is their first year of production, trading at a 4 multiple. I am Gold, they've kind of fixed their problem. 670 million with a 5 multiple. Eldorado 670 at a 4. Perseus 650 million at a 3.5. Equinox, even with their high cost, Equinox is at 500 million, trading at a 5 multiple. Okay, so we gotta hit this guy again. Where were we at? I think we were at Centerra. Yeah, we were at Centerra, and I got to that free cash flow, 500 million in free cash flow with a 3 multiple. And look at their balance sheet, 592 in cash and no debt. What's wrong with this picture? they're just, they're just, it's unbelievable. And most of their mining is done in Canada. They have one mine in Turkey, and they have a good management team. It's like, what's going on? Dundee. Dundee. This is the so Dundee is not a 4. It's only a 3. It's not a 3.5. I think, you know, some of these probably could be moved to 3.5. But I have this as a 3, so this is basically a 5 bagger. So some of you are like, okay, I don't really want Centerra Dundee because it doesn't have enough alpha for me. I want 10 baggers done. I don't want 5 baggers. But these 5 baggers could turn into 10 baggers because you don't know how they're going to grow the company. Dundee is a growth company. They're always trying to do acquisitions. And Dundee has really good cost. Balance sheet for Dundee, 650 million in cash, no debt, plus a 5 multiple, generating 400 million. So in theory, they could have $1 billion in cash at the end of the year. $1 billion. So if they're generating that much cash, you can imagine their margins are, you know, well over $1,000 an ounce. Dundee has always been known for low cost. Eldorado. So Eldorado, it's they have a lot of gold. Like 20 million ounces. So this is a company with a lot of gold, but you have risk, location risk. Most of the location risk is in Turkey. They're also in Greece. Not as much exposure in Africa they used to have. So some people are like, I don't really want to touch it. It has a little bit too much location risk for me. Um, it's only a three. It doesn't really have enough alpha, and so some people are gonna like pass on that one. And Endeavor's the same way. Endeavor is West Africa, but it's probably the elite producer in Alaska. It's $5 billion, 5 billion market cap, but they have a good balance sheet. Well, they have 1.3 billion, which is kind of typical for majors. They don't mind having cash, but they're generating 1.5 billion in cash this year. So if they want to, they could pay off all their debt in 1 year. But they're trading at a three multiple, 3.5, which is, you know, I I I think that's too low. So that's why they're on the list. Equinox, Equinox has been a kind of a problem child, generating, I mean, with costs that are too high. So that's why it's a 2.5 and a B, because I'm waiting, and it's not a top pick. I'm waiting for them to fix their cost problems. So if we scroll over, I guess can look at I know they don't have a good balance sheet, so they only have 192 in cash and 986 in debt, but they're generating at current gold prices 574 million, trading at a five multiple. So they could fix their balance sheet fairly quickly, but their cost are fairly high. They're I have them at $2,000. So their ASIC's about 1,700. That's a little high. We want to get, so I'm going to go ahead and sort by cost. And so go to the top and okay. So we got Dundee is the cheapest, is the lowest cost producer on here. This is the break even cost, 1,300. So their margins are about $1,600, which is kind of crazy. Oh, here we go. Here's the margins. It's probably better to look at the margins than look at the cost, right? You can see the margins, they're right next to each other. So then we have Orla. Wait a minute, I can scroll this over. Okay. So here we have, you can see the cost and the margin. So we have Dundee and Orla, the cheapest. G Mining, Capricorn. Remember I said Capricorn, I have them as an A. Artemis. I hope if Artemis can come close to their ASIC, because it's in Canada. 50% margins, which is crazy. Ramelius in Australia, Bellevue, Perseus, Centerra, these companies all have $1,300 margins. Endeavor Mining, West Africa, Pantoro's in Australia, that could be a number 11. Um, El Dorado, oh yeah, I was going to tell you guys which ones I don't know, but I'll tell you in a minute. Greatland, look at those margins. Newfound's kind of fixed their problems, which is kind of shocking. Aura, the one in Brazil, down in South America, mainly in Brazil, 1650. Orezone, Resolute. Okay, now 1700. I think anything 1700 is good. West African, Allied, Eris, Jaguar, Vault, and now we start to get a little more pricey. Now we're at 1800. So at 1800, we're talking about a 1450 ASIC. Yeah, 1400 ASIC, 1450 ASIC, somewhere in there. And now Caliber, I think Valentine's going to lower their cost a little bit. B2 Gold, I think B2 Gold's costs are going to come down significantly. So now it's at 1850. I think that's going to come down maybe $200. K2, I think their costs are going to come down about 200. Gold Road, their costs are going to come down because they're building a new mine. Genesis, um, also, I think their costs are going to come down significantly. Pan American, I don't think their costs are going to drop that much. I think Pan American, Newmont, Barrick are kind of stuck in the high cost area. Fortuna, I don't think their costs are going to drop either. Integra, it's going to take them a while. Their costs aren't going to come down. Catalyst, mm, I'm not sure on them. Westgold, their costs are going to come down a lot. Regis, Australia. Yes, I think Regis costs will come down. Equinox, their costs are going to come down. IM Gold, not sure if their costs will come down. Galano, their costs are going to come down. And SSR Mining, their costs are going to come down. So all these companies, that are 1850, most of their costs are going to come down, which is, really good. I mean, that's a really good sign, right? Um, because, if gold keeps going higher, uh, we're going to do good. So where was I at? I was at El Dorado. Wrong one. So I was at El Dorado. Uh, I think I already did El Dorado, right? Yeah, high cost, location risk, Endeavor Mining. Um, well, I think went over this one as well. West African elite company generating a lot of free cash flow. Yeah, I did that one. Equinox. I like what Equinox has been very aggressive, trying to become a major. They're not there yet. I have them as a mid-tier producer. They haven't got there yet, but they're going to be one. They're very close. I think they're up to like 1 million ounces, but their market cap hasn't gotten them there yet. Greenstone in Canada is going to lower their cost, and so that's going to be a game changer for Equinox. So this is kind of like the last chance to get in early on Equinox. But I like their properties. They have high cost, but I think their cost will come down. But as long as gold prices don't crash and stay lower, Equinox should be able to generate enough free cash flow to push their share price higher. Fortuna, this is another West African mine. Um, I do like their West African properties. I think they're going to expand. I think they are going to add production. I do think Fortuna is a growth story. I think Fortuna is going to acquire Abra Silver. It's either going to be Kinross or Fortuna. I think Kinross has the inside. If it's not Kinross, then I think it'll be Fortuna because Fortuna has a mine very close to Abra Silver's project. I think it'll be one of those two. But if Kinross wants to build it, they have the inside track, I believe. But Fortuna, I do think they're a growth story, so I do like it. G Mining, I'm a big fan. I think G Mining has a really good management team, very aggressive, growth story. I think they're going to just keep buying and building mines. I mean, I really like them. Allied Gold and G Mining, I think those two are two of the most aggressive ones out there that are just going to buy and build. And I like that. And so I think G Mining, especially if you own Cabral, G Mining, I think is going to acquire Cabral because they're right next door. But if you like growth stories, then G Mining definitely there. Location risk. They're in Brazil and they're in Guyana, and so they're in good locations. So G Mining, I think, doesn't have that high location risk. Galiano's in West Africa. Um, they're not in. I think they're in Burkina Faso. They're not in Mali though. Um, we can go look, right? Let's go look. I think they're in Burkina Faso. Oh, they're in Ghana, which is even better. Yeah, yeah, they're in Ghana. So Ghana, for me, Cody and Ghana are both the best places to mine in West Africa. Burkina Faso and Mali are not the best because they're both under junta rule right now. But Galiano's in Ghana, which is, I think, okay. But I don't have it as a top pick. I have it as a 2, 5, and 5 because of West Africa. Plus, they have high cost, so they need to get their cost down, which they're supposed to. But Galliano is probably a stock that most of you are going to pass on. It's like I have enough. There's better fish in the sea kind of thing. But I put it on here because um, they're going to generate a lot of free cash flow, and it's cheap. Trading at a very low multiple. And if we look at the multiple, trading at a 3. So, decent balance sheet, 123 cash, no debt. But when you can buy a company with a 3 multiple, and I think their costs are going to come down, so it's okay for me. Um, so I don't think I've mentioned a stock I don't own yet. I'm going up the list to see if I find one. Nope, so far I own every stock on that, every stock we've mentioned. Okay, so uh, Genesis. Um, Genesis acquired um, Santa Barbara's projects in West Africa, and they have, I think, 18 million ounces of gold, and it's kind of under the radar because until they acquired those projects, they weren't a producer. So I don't think they were a producer. And then once they acquired those properties from Santa Barbara, they went on the map, and now they're basically progressing from there, planning on growth expansion. So they have all that gold. So they basically were acquiring gold, but they weren't a producer. They had a whole bunch. And then they just pivoted into production, and now, boom, now they have all these development projects to build. So Genesis, um, it's kind of pricey because I have it at 2.5. So it doesn't print as a five bar, but I have a like it's rare. But I think it's a growth story though, because they have all that gold, and so I like it's also the location, West Africa. Um, I want to own these West African mines because I think they're going to consolidate, and when they consolidate, I want to own both companies that when they merge together, I like to own them both, or own the buyer, but I don't want to own the seller. So if I yeah, so one of the reasons why I buy all these Australian mid tiers is because if I own them all, then if they merge, it's not going to bite me. I'm going to benefit. I'm still going to own those properties. So Genesis, even though it's a 2.5, I think it deserves a really good look. Um, Gold Road, another Aussie. These are all in the Aussie 8. Any stock that has $1 billion in the Aussie is going to be on the Aussie 8. Um, we have three in a row. We got Gold Road, and then we have Greatland. Um, Gold Road, we got to wait for them to grow. So that right now they're just printing. Both Genesis and Gold Road both have like a 10 trading at like a 10 multiple because they're going to grow, and then and then potentially, but I have it higher. I have a 3.5 and an A minus. So I like Gold Road better than Genesis. Gold Road and Capricorn, I've always considered them kind of the elite mid-tier producers, but Genesis is catching up to them fairly quickly. And the other one that's catching up to these guys very quickly is Greatland. Greatland, they got really lucky. So Greatland acquired the Haveron project from Newcrest, and they got with it, they got the Telfer mine, and the Telfer mine is in production now, and they produced 30,000 ounces in December, which was their first month, which is a lot of gold. 30 times 10, 30 times 12 is 360, 350,000 ounces a year. But the grade, I don't know if they're going to maintain the grade, but they're supposed to run that for 3 years. And so over those 3 years, they're going to have enough cash to build Haveron. And Haveron is just a beautiful project. 400, it's like Blackwater, 450,000 ounces a year for 20 years. Tier one project. I don't know why Newmont didn't want to keep it. It's mystifying to me. Greatland, I mean, look at, Greatland's at $1 billion, but they're valued half off. It should be valued at 2 billion. Have it as I don't have it. I have it as a B plus. This is one that's going to probably go A minus and then 4 green, top 25. I'm waiting for them. They just started. December was their first month of production. Um, but yeah, I'm a big fan of Greatland. I think that sky's the limit for this company. I mean, it's uh, it's a really good property. I think Greatland's going to end up. They have, I think that, oh, we have insiders at NA, so they might be vulnerable there. But I see consolidation in West Africa, and so Greatland is probably going to merge with somebody at some point. All these mines are, I think they're all going to start shrinking, but I'm a big fan of Greatland. I am Gold. So I am Gold was a problem. I thought they were going to go bankrupt. I mean, they were having lots of problems and they still have high cost, but they generate a lot of free cash flow. It's like I think they have problem. They're not on the top 25, but I do have them as a top pick as a B plus. I do have the risk is high. But I'm a fan of I Am Gold. I think they've straightened things out, and historically, I Am Gold has been an aggressive company with growth. I hope they get back on that path and start trying to grow and start being aggressive, because there's a lot of companies out there that can be acquired and built. I mean, build and buy, right? I think like G Mining, somebody's got to do it. Somebody's got to buy Victoria, someone's got to buy Banyan, someone's got to buy Free Gold Ventures. Um, there's a lot of projects out there need to get built. Someone's got to, I can name a few more. Gold Shore, that's another big one that needs to get built. O3 just got taken out, so I think it was Agnico Eagle. They're going to build that one, but there's still a lot of projects out there to be built. Lahontan, Getchell. So someone's got to buy these projects and build them. And I think it's going to be the mid tiers. It's not going to be the majors because the majors just want tier ones. Integra, Integra, the name just came to me and it slipped through. It's not Florida Canyon. Um, so Integra, yeah, Florida Canyon. Sorry, I was right. It's Delamar. I keep thinking it's called Delamar, but it wasn't. It was, oh yeah, Delamar is the project in Idaho. And Florida Canyon is the one they bought from Argonaut that they put into production. So now this is the same thing that Discovery Silver just did. So they have this big development project and they said, why wait when there's a producing mine we can buy and let's turn ourselves into a producer right now. Boom, let's change. And so Discovery did it, Integra did it. I think that's very smart. And so now Integra, instead of just sitting back and waiting for years and years to build these things. I mean, we're looking at, 26, 27 for Delamar to come online. And while we're doing that, now we can generate a bunch of free cash flow. It's going to make it the big advantage of turning it into a producer is it makes it a lot easier to finance Delamar because it's really difficult to finance these projects because the banks they force them to do a stream, or they force them to dilute shares, or they force them to do a convertible loan. But the financings usually always they're not great. There's always like these little poison pills in these financings. So when you have cash on your balance sheet, it makes it a lot easier to finance these projects. So that made Integra, it was a game changer for Integra. So basically, we're getting De La Mar for free. I think Florida Canyon is worth 300, $400 million easy. It's a 70,000 ounce a year mine. That's three, 400 and it's valued at 200,000. So we're basically getting a 5 million ounce project, Delamar, for free. As I like to say, you can't beat that with a stick. So I like Integra. I think it's, I think I like the location. I like the value. So I like the risk reward. So it kind of fits there. Next one's in Jaguar. So I think I've been talking a little bit about Jaguar. I said that it's going to take them a year to clean up their mess, and we don't know how much it's going to cost. But I don't think it's a I don't think it's a bad entry point here. I have them on the top 25. I have them rated really high. The reason why is because if you look at their drill results over the last 2 years, they have two properties where their mill is running at 50%. So that means there's no capex or very little capex. All they have to do is fill the mill. And most of the drilling is underneath those mines. So all they have to do is top them off. So they top off those two mills and they're at 150,000 ounces of production. That's a 1.5 to $2 billion company. And they're currently valued at 150. So that's 10 bagger, which is, I have it, 4. So I think that works there. K92, they have one of the best properties in the world. They're they're going to be drilling that thing for over 10 years. There's areas there that they just haven't even started drilling yet. And every time they drill, all they do is find head grade of 8 grams or better. That's why I have it. I don't have it as an A minus because of the locations and um, Papua New Guinea, and that's had history of issues. So you have some location risk, but I have it as a 3.5. I think it's a likely five bagger. Now, this is one of those ones where you're like, Don, it doesn't have enough, juice. I don't really want it. But at a certain point, they have to, once they get enough cash on their balance sheet, these guys are just very conservative management team. They don't spend a lot of money on drilling, not as much as they could spend if they wanted to. They could spend a lot more if they wanted to. They basically plug along. But this is a 500,000 ounce a year mine, but they're just taking their time to build up to it. But at a certain point, I think they're gonna decide, okay, let's go grow, let's go buy somebody else. And guess what? There's a project right next door to them on the same geology. And they could basically buy that and then drill that and then expand production. So there's that. So I like K92. New Gold. So okay, I own. Yeah, we haven't gotten to a mine I don't own. I still own all of them. New Gold. I sold New Gold when they were having those problems, and then I bought it back, and I'm glad I bought it back because they basically have fixed their problems. Now, I've always liked the New Gold's management team, so now I haven't put it on the top 25, and I haven't made it to an A minus. But next time I analyze them, because their costs have come down significantly. I mean, if we look at their cost, if we look at their margins, um, it's pretty remarkable. This is used to be a high cost company was losing money, and now look at them, 1650. They've gotten their ASIC all the way down to $1,300. Very impressive. Margins of 1250. New Gold has been a turnaround story. Balance sheet, they still have a lot of debt, but they have a lot of cash, and that debt's going to go bye-bye. Um, these gold prices stay up here, and I think New Gold is going to find a way to grow. I think New Gold, historically, New Gold's been aggressive. I wouldn't be a bit surprised if New Gold does an acquisition. That's in their DNA. Orezone, a lot of you guys are going to probably pass on Orezone because they're in Burkina Faso that currently has a junta. But I do have it as a 3 and not a 2.5, and I have it as a B plus. And the reason why is because of the property. I just really like the property. This thing has never been drilled below 200 meters. They just drilled really shallow. I've seen the drill results. This property is, I mean, it's a tier one 5 million ounce property, lots of drill holes, but it's never been drilled at depth. So there's mineralization below the pit. They just never drilled it. It's like we just go to drill 100 meters. So um, they're going to find a lot more gold. So Orezone, they have 25% insiders. Somebody tried to acquire them and they rebuffed it, which is a good sign. And so it doesn't look like they're going to take it. They won't do a merger unless they like it. Otherwise, they would have gotten taken out already by Endeavor, Perseus, or West African. But I'd like to see Orezone do a merger of equals, maybe with something like that, because they're a one mine company. It's hard for in West Africa. It's kind of difficult for these companies to stay independent with a single mine. But I do like Orezone's property quite a bit. Orla, I bought Orla as soon as they basically came into existence. I mean, the first time I analyzed this company, I bought it. Orla. Thing I love about Orla, this is another aggressive company that's going to grow. They did the same thing that Discovery and Integra did. They were basically exploration company, and then they basically bought a producer and became a producer overnight. And now they just bought another company, another producer where they're expanding production and their market cap jumped to 2 billion. I don't know what it was at when I first bought it, but it was under 500 million. And Orla's got a ton of gold. I don't have them in my top 25 because they didn't, but they're probably going to be there very, very quickly. And the reason why is because were a small producer, but they just did an acquisition. So now they have a lot of debt, 600 million, because they just did that debt deal. So they building in mind, but they're still only trading at a 5 multiple, so they're still cheap. But I'm I've always liked Orla because I like their management. I think it's strong, and I think that they got a lot of gold, and I think they're very aggressive. I think they're going to start growing. So who did they acquire? Insiders 50%, which is very impressive. So you got Newmont at 13, Pierre Lassonde at 10, Agnico Eagle at 9, and then Fairfax. These guys are this guy's a billionaire at 18. So this company's not for sale. I mean, they got some really strong insiders, about as strong as you can get. If you look at their like 50% insiders, and this is a company that's not for sale, it's going to grow. They got 15 million ounces of gold. So they're producing 300,000 and their margins are almost $1,500. So really strong margins. I have them growing to 500,000 ounce producers. The locations are good in Mexico, Nevada, then Panama. This is a small mine. I mean, the Cerro Colombo, they're probably never going to get a mine that one, but it doesn't really matter. Um, this is a growth company. They're going to keep growing. Trading a 5 multiple, generating 400 million in cash. Um, so I want to own these quality, um, quality aggressive companies. We'll put it that way in decent locations. So like Orla, like Pan American. I don't think I really need to explain Pan American too much to you guys. They acquired Yamana, which turned them into mainly a gold producer. Silver production right now is only 25% of the revenue. So it's mainly a gold producer. I have mostly silver, but that's not true. But because they have so much silver resource, they have 1 billion ounces of silver. I'm gonna leave them in the silver camp. Um, because that silver eventually is going to get turned into production, I think. And I don't think that silver's left their roots. I think culturally, I think that company is going to continue being a silver miner. It's part of them. But I have them as an A. They don't have low cost, but I still have them as an A. And the reason why is because it's one of the few go-to gold mine mid-tier. Well, I have actually a major mid-tier, 9 billion. That's not a mid-tier, Don. It's a go-to stock that Wall Street's going to buy, the hedge funds are going to buy, and so I put it this way: of all the stocks on this list, I think Pan American is probably the most uh, must must own. I would kind of rate it number one for must own kind of stocks. He's got to own that one, right? Pantoro, this is another one that is probably going to make the Aussie, list. It's a mid-tier producer, 500 million. It's a lot like a Catalyst, but I like it better than Catalyst. I always ignored Pantero until they got into production. And once they got in production, I looked at their exploration potential and I realized I had to own it. So I have it as 3.5, 3.5, 3.5. So I like it a lot. I don't have it as an A minus yet, but it's probably going to turn into one. Um, Low debt, 12 million, trading at a 4 multiple. Um, and I like their exploration potential a lot in Australia. Kind of an under the radar company, but I'm glad I got it. Perseus, wow, there's only one stock on this list I don't own. The only one that I don't own is Torex, and I'll tell you why when we get there. Perseus is, I would say, second to from their Western Africa. I would say they're second to in uh, Endeavor Mining. I'm starting to get tired. I've been talking for an hour. They're second to Endeavor Mining, in my opinion, on elite miners, 2 million. West African is right there with them. Allied is right there with them, but I still rank them second in West Africa. West Africa is known for shallow open pit mining, and it's usually not super expensive to do that. You generally have fairly good cost, and so they generate very good cash flow. And so and it's kind of, really basic mining, right? You just dig the dirt up and mine it. Um, and so Perseus has that advantage over a lot of companies, um, with their cost advantage and ease of mining. And so, I it doesn't have, 10 bagger, but they're steady growth, lots of generate a lot of cash. Um, they're sitting on 700 million in cash and they're generating 600 million. So they're going to have Perseus is going to have over $1 billion in cash very soon. And their multiple is 3.5. And what they're going to do is they're going to buy back stock and they're going to pay a higher dividend. And this multiple is going to double. And it's not only is it going to double, it's going to double and then double again. That's what that's going to do if gold prices keep going higher. And so you're going to get, um, two, three, four bagger just on multiple expansion alone, possibly. Okay, Ramelius. So Ramelius, um, it probably doesn't deserve to be an A minus here. I looked at it and right now their costs have jumped a little bit. Um, Next time I analyze them, um, I might make them a B plus. This might turn to a 3. But of all the stock, I used to be really bullish on Ramelius. Uh, let's look. So their balance sheet's fine. 295 million in cash, no debt, generating 400 million in cash, which is fine. So their costs are okay. Multiples of 5. So Don, what's the problem? Um, the cost. So we got there. Well, actually, Ramelius is absolutely fine, Don. I thought there was an issue with Ramelius last time I looked at it, but I'm not seeing it here. It looks fine. Okay, Ramelius, I don't see the issue. Let's go to Regis. Okay, Regis, another Aussie 8 stock. Um, oh, there we yeah, so I just have Ramelius as 2.5, so it just doesn't have the upside. That's the issue with Ramelius. It's not cheap. Regis 5 bagger, B plus. Regis is having trouble permitting one of their projects. But even without that project, they're still okay, trading at a 5 multiple. They're generating a lot of cash, 300 million in cash. Balance sheet isn't too bad, 238, 188. One thing that I've seen with these mid tiers in Australia is they don't tend to put a ton of debt on their balance sheet. They're very smart in that regard. They don't want to put the company at risk. So instead, what they do is they dilute their shares instead. And you see these really high dilutions in Australia. But Regis, they're having permitting problems at one mine, and that needs to get resolved. But I don't think that's not a deal killer for me. Resolute, now this is one you're probably going to pass on because it's West Africa, and I don't have it as a top pick, and it doesn't have the best rating on it. But if you're after alpha, it's trading at a very low multiple. It's trading at a 1. So if some of you are probably going to want to chase multiple expansion, they're generating 400 million in free cash flow and they have a 1 multiple. So, it's a risk reward thing. If you're chasing alpha, that one's really interesting. SSR mining, so that's the one they have a problem in Turkey. I think they're going to resolve their issues in Turkey. So I like it. I mean, you can wait until that's resolved, or you can gamble and have confidence it can be resolved. But the reason why I think it's going to be resolved is they found out it was not SSR mining's fault. It was poorly engineered. And so all SSR mining was doing was going by the expert opinion of the engineering, but the engineering firm was at fault. So when they get sued, they're basically, I mean, people are going to sue SSR Mining because they have the deep pockets, but the engineering firm is really at fault. So the judge is probably not going to give a huge, you know, payout to somebody because I think there was like 5 or 6 people who died in that. And I think the judges are going to say, well, you want them to pay it, but it wasn't their fault. So I think that's going to help them because we worried about how much money it was going to cost them in legal fees and in fines, and they are going to get fined, even though it wasn't their fault. They're still going to get fined. That's just how the nature of the beast. But I think the courts are. It's going to be a lot helpful for them because they're, according to the legal experts, it wasn't their fault. So they're trading at a 7, which isn't terrible, but that when that mine restarts, this would drop down to like a 4. And so it's kind of priced in a little bit there. It's expecting the restart. Torex, okay, this is the one I don't own. The reason why I don't own it is because they were going to go from one open pit to another, and both pits were really big, and I didn't trust it. I was like, they might have problems on the ramp up, but they've had no problems on the ramp up, so my fears were, you know, I was misguided. But the one thing about Torex is that oh, it's not cheap, 2.5. So it's, I might want, if it was cheaper, I might like it here. But let's go and look at the multiples. Trading at a 4, where you think, okay, Don, that's kind of cheap. But if we go all the way out and we look at, the upside, it's only trading at 370%. Trading like a 4-bagger. So it's not, because they don't really have any growth what they're currently producing right now. Because one pit's going to come offline and they're going to build another one. It's so for me, it doesn't have the alpha, so I don't. That's the one that I don't own. Vault Minerals, solid. This one used to be called Red 5. It merged with Karora. They renamed it Vault. Real solid Aussie mid tier. I'm a big fan of Vault. I'm also a big fan of Westgold, which is right below it. So if we look at Vault, I mean, it's ridiculous to be trading at a 4, trading a 4 multiple, generating 450 million in cash, and they have zero debt and 284 million in cash. I mean, good balance sheet, good cost. It's silly cheap. Um, that one you're lucky. And then West African. It's 10 baggers. So this is one of those ones in West Africa where the only reason why you own it is because of the alpha. You're basically going to want to chase that. It's trading at a 3 multiple, generating 400 million in cash, and balance sheet is not terrible. 270 cash, 230. I mean, they can pay this off next year if they want. These balance sheets are going to really clean up at the end of this year if gold prices don't go down. But you can see why I own it. It's just, silly cheap. I mean, these things could easily go into the double digits. The multiples could easily go into the double digits if we go into a bull market. Last stock is Westgold, and I've always been a fan of Westgold, West African. These are Western Australia, excuse me. These are all Western Australia. Just about all of these Aussie stocks are Western Australia, which is, I think, the best place to mine in the world. Top 25, not quite a 10 bagger, but solid 5-bagger. I should maybe a 3.5 instead of a 3. And I have it an A, and I like it a lot. I mean, not even an A minus, but they have taken on some debt, but historically they never had any debt. It was like that was the reason why I had an A. So maybe it's going to go down to an A minus. We'll see if they get rid of this debt. But the CEO told me that they were going to have a cash focus, so I'm expecting them to be 200 million in cash, no debt. That's what I'm expecting them. They're trading it at a 4.5 multiple, generating 300 million in cash. Plus, this 300 million is going to increase because they bought a Karora and they're expanding production. So that's it, guys. Thanks for. I knew this was going to be a long one. It was extremely long, right? But we're going to end it there, and I'm glad you guys liked it. If you did like it, I'll see you later.